Creating wealth through information.
And we're back in for Business Express for a Tuesday morning, the 28th day in the month of June 2022. Joining us, as usual, every weekday morning at 6:30, we have the main man, Rotus. Good morning, Rotus.
Good morning, Vic. Good morning to all our listeners out there. Good morning to our special guests. Good to be with you all again today.
All right. Thank you, Rotus, for joining in. Also, we have this morning, as usual, Onome. Well, not as usual. He joins us once in a while, and Onome is very different to all of us here. Onome, good morning to you. He's an investment analyst, by the way. Good morning, Onome.
Good morning, Victor. Good morning, Lagos, the rest of the world.
Onome, we couldn't hear you. Say that again.
Good morning, Victor. Good morning, Lagos, and the rest of the world.
Thank you very much, Onome, for being a part of the show. Well, this morning, we'll be looking at the stock market roundup. And this is brought to you by Nairametrics. Rotus.
Yeah, look, it's just, once in a while we get together and we just gist about the markets. We try to step from all the stuff going on in Nigeria and just talk about making money. Onome, I mean, let's just chat, and Lagos, you hop in as well. Vic, throwing whatever questions you want. Onome, the market seems to have been on a positive run. I think since last Monday. I think the prior week it was a very bearish, and then we've been bullish since last Monday, and we closed positive again yesterday. I think about 50 basis points. How would you describe what you've seen on the NGX?
I think for some of the big cap stocks, they are kind of retaining gains. But I expect that as coming weeks, go by, earnings coming. I'm expecting slightly more challenging earnings. So I think that's pulled down the market a bit. I think for this month so far, the market is down 2.4 or 2 something percent. So I expect more of a pullback downwards as the weeks go by.
So you're saying that this run basically cannot be maintained, is what you're saying?
No, it can't be made.
And I guess, is that just the nature of the markets? So where you've got a dip for 1 week or 2 weeks, then you've got a pickup, then you've got a dip, then you've got a pickup. Is that choppy back and forth that we're going to be seeing?
I think I attribute it to 3 reasons, right? So if you look at the way our market is, it's skewed, so to speak. Maybe a bunch of 5, 10 big cap stocks, so every other stock will be going down. And when you have one of those select big cap stocks, right, going closing positive, whether it's Dangote Cement or Nestle or Airtel Africa or NCM. So once you have a bunch of those stocks closing positive, the market is very likely to close positive. So from that angle, yes, you could have a pull, so to speak, upwards pull, and the smaller stocks go down. But when you look at the macros generally and what's happening globally as well, markets are going down, and I expect that to reflect here soon.
Good stuff. If we look at I don't know if you like any of these names from yesterday's positive close. Maybe we start with the gainers. We had ETI in the banking sector. That was the top gainer for yesterday. John Holt, Linkage Assurance, Onome Oil, and Cornerstone Insurance. Do any of those names jump out at you?
Okay, I'll divide it into 2. So I'll take it from a fundamental basis and I'll take it from a price basis. So on the fundamental basis, I think what I might find interesting would be ETI, the issues with the Nigerian units, trying to resolve them to make considerable progress. So that's a yes for me. Okomo, also a yes for me. I think they would do quite well. Q1 numbers I looked at were okay. Last year was a blast for them, and I think this year would maintain that record. So those 2, I guess, I would say maybe I want to keep an eye on. From a price perspective, I think Okomo is a bit pricey. It's 210. and it's not overvalued, but I just wouldn't get in at 210. So maybe the sub 200 price level. I'd go in. I think ETI is somewhat fairly priced. Yeah.
Okay. Then if we look at the losers from yesterday, what are the losers? I think PZ Cousins, Eternal PLC, RT Briscoe, Ardova, and Nigerian Breweries. Would you have any picks on that side from the losers from yesterday?
Probably Nigerian Breweries. Last year's results were fair, and I expect this year maybe less of a bounce, but fair enough. So I'd say I'd go with NB. I know PZ numbers were good, but I'm not too positive on that sector of consumer goods. So I'd say Nigerian Breweries.
Since you mentioned the breweries, Nigerian breweries in particular, the brewery sector, it did seem to be on a hot streak not too long ago, but it might look like that's cooled off. What do you make of the brewery sector?
I mean, from a fundamental basis, last year's numbers were good, but they're going to face pressures this year, right? You're going to face pressures around costs, energy costs. If we have the economy slowing down, you're going to wonder how much of demand is cheaper. You're going to wonder will they be able to push any price increases. I think last year, a couple of them, they had a couple of price increases, but we will see those this year. It's hard to predict, So then maybe from a short-term basis, it's also possible people are taking profits, as well. So naturally, you see that pullback. So I think those are the net for me. I'd say maybe cautious. I say cautious hold, a cautious buy. Yeah, between that.
Okay.
All
what
right.
about
Quickly?
Yeah,
Let's bring some messages in. All right. So you listening now can be part of the show as well. Send in your messages, ask questions. It's 009-444-0981. Benga Komu has a question here. Says, so what's the quarrel between the big yellow company and the banks? Heard the matter is in court. He continues, so the market has been bullish. On what indices, I beg? Because I don't understand how the whole economy is growing and the market is bullish. Do they operate from another planet?
Okay, Onome, you want to take that one?
Okay, so for the first one, I'm guessing you take on Friday, so I can dodge that, right? And the company question hasn't yet sent a formal statement to the NGX, so I'd rather leave that. So why is the market doing so well when everything is falling down? I'd say it's sort of a bounce, right? So if you look at some of the FY 2020 numbers that came in, they were quite good. And if you look at the first maybe 2-3 months of the year, interest rates were low. So it's a tug and push thing between fixed income and equity. So if fixed income returns are low, you're going to have it go towards equities. Symbolically, that's changed, right? When the CBN increased the MPR rate, but it's yet to filter into markets. So barring any significant macro shocks, economy and all that, I guess we'll see stocks continue to do quite well, at least, despite what's happening everywhere else.
Okay, so we have this other one in from AIE. It says, what are the factors driving the stock market this far? Why has the fixed income market not taken a shine off the stock market?
Okay, so Onome just answered that literally just a moment ago. So basically, interest rates are low, fixed income is not looking attractive. So essentially, where else can you go? It's the equities markets that is looking attractive. How long this can be maintained, though, that is the question. But yeah, if you're an investor, you got to take those profits. Onome, what about financials, consumer goods, and industrials? Well, what do you make of those sectors?
For the financials, I mean, depends on what branch of financials, right? So, the banks definitely would do much better with higher, interest rates and all that. You know, higher interest income. Some of them will be able to price their loans and all that. So I think the banks would do well. Insurance really isn't very attractive at the moment. And you have a couple of, let's say, composite financial services firms, the likes of custodian, UCAP, and all that. I think those would do quite well because they also would benefit from higher rates. Industrials, look at the likes of Dangote Cement and coal. The challenge for them will be energy costs, really. And so I'm waiting to see Q2 numbers, see how they perform and all that. Because, on one hand, they have higher energy costs they're going to deal with, and that's something that is prevalent across industrials and consumer goods. They have higher energy costs to deal with. But on the other hand, for consumer goods, I think there's a limit to which you'll be able to push those additional costs to your customers in terms of higher prices. For the industrials, they might be able to do that. So with the cement space, really, they've had robust demand. So I guess robust demand and a handful of players in the space, they might be able to have it easier to push price increases. So I'm cautiously optimistic on the industrial and financial sectors. But for consumer goods, I'd like to see and get a feel of how many things will deal with energy cost pressures and how much you can push that cost up.
All right, let's look through some of the messages again. Richard Akin says, Rotus, you mentioned PZ on the losers chart yesterday, but the COI just, released their Q4. Please, can your guest speak to the numbers? Let me add this other message in as well. From Michael in Marina. I don't know why people are saying MTN is having a quarrel with banks over the Momo fund recall. That's a normal process for recalling funds. Get a court order that would compel the banks to recover the funds from the unintended beneficiaries. Same process is applicable to recall funds by individuals. You want to react?
Well, I mean, we've okay, go ahead.
Yeah, so I'm skipping the MTN story. Obviously, I'd like to hear have a bit
officially.
more officially. Yeah. For the other question, I'm not really a fan of PZ. So even though those numbers were great, right? One is that those are Q4 numbers, those are now audited. So yeah, you might have some change from the final set of numbers after they've been audited. Two is PZ has a somewhat narrow range of products. You have higher chemical, you have probably 3-4 consumer goods. So it's a rather narrow range. And yes, those numbers are partly coming from a low base. So even though they had revenue went up by 21%, the previous year was a low base for them. So I think for me, what I'd like to see would be the most recent quarter, and and all that. How would they cope? Because if you have a slowdown in the economy, GDP numbers tell us that white electronics are going to be hit hard, right? And you really cannot push so much of a price increase in that space. So I'd say it's early days yet. I'm typically not a fan of that firm.
All right, Onome. Yeah, we need to go now. I mean, the messages are still coming in, but we'll keep it going on Twitter. Thank you so much for tuning in on today's episode brought to you by Nairametrics. Follow Nairametrics on all social media platforms. Also subscribe to their premium newsletter, Stock Select Newsletter. That's SSN, Stock Select Newsletter, a weekly stock guide written by Ugo Dre on local and international best performing stocks to guide investors on what to buy, sell, and hold. Now, Nairametrics is offering a 30% discount to all subscribers from Business Express. I'll say that again. Nairametrics is offering a 30% discount to all subscribers from Business Express. Simply visit ss.nairametrics.com/coupon and enter the promo code SmoothFM to get the discount. All right, ss.nairametrics.com/coupon. Enter the promo code SMOOTHFM to get the discount. Thank you very much, Onome, for being a part of the show today.
Thank you for having me.
And thank you, Rotus. Now let's get the conversation going on Twitter. It's at RotanQuote. You can ask more questions. I see some questions are still coming in with regards to the stock market. Also tag Smooth 91 FM. My name is Victor Pepple. We'll bring you freshly pressed at 7:30. Good morning.
Express on Smooth